Okay, welcome to the Insurance 101 call. This is the call that we go over all the basic information about selling life insurance. And today we're going to go over working with riders. We're going to go over all the basic riders that we use for term life insurance, for whole life insurance, and we're just going to talk about what they do and how they work and what they mean, because every carrier has riders, but some carriers have different levels of riders. So we're going to start off with a whole life policy. How many people here, and if you guys can hear me, turn on your cameras so that I know that who I'm talking to here, and so I can see your face, know that I know that you guys are paying attention here. Awesome. There's T. So how many of you have sold mortgage protection policies in the past and are continuing to sell mortgage protection? By a raise of hands. Sam? Okay. And then how about final expense? Okay. Most of you are doing final expense. Okay. So we're going to go over the riders here, and this is a good spot where you want to take notes, because these riders are a little bit different per carrier. It's a little bit easier with whole life coverage because most of the riders are the same, except for a few companies have a different tweaks. But we're just going to talk about the basic riders and then go from there. Now, I want to start off by telling you this, that for term insurance in California, there are no riders, and none of the carriers have riders for term insurance. Okay. In every other state, every state is specific, but as far as I know right now, California is the only one that doesn't have any riders. Okay. So if you guys have a California state as a license, just know that if you're going to go write a term policy on a client. Okay. So we're going to start with whole life. Pretty much all the carriers are the same when it comes to whole life as far as a living benefit, meaning terminal illness is really the only rider that comes with pretty much all of them. And it's the same, clear across the board, 50% terminal illness. Okay, that means that if you're with Americo or you're with Mutual of Omaha, they have a $50,000 policy. If they become terminal and the doctor says they're going to die in 12 months or less, they can withdraw 50% of that policy while they're still living. That's terminal illness. Okay. Now, all the carriers have that. Now, Americo has that plus a couple of different ones. Okay. One of them is called accidental. It's already built into the policy. Okay. It doesn't cost any more. It's already built into the price. It's a double indemnity, meaning that if they die in an accident, it doubles the policy. So if they have a $40,000 whole life policy, it doubles to an $80,000 policy automatically. Okay. Now, accidental doesn't mean that they have to die in a car accident. If they die in a slip and fall in the shower, that's an accident. They slip and fall going down the stairs, that's an accident. If they are on top of the roof putting up Christmas lights, playing Santa Claus, and they fall off the roof and the reindeer don't catch them, they hit the ground, that's an accident. Okay. The other thing that they have now, all the other carriers for accidental, you actually have to check a box and add on accidental. Okay. Now, with the guaranteed whole life policies, they do not have accidental. You cannot add on accidental for that. Okay. Now, Americo again has a triple indemnity called a common carrier accidental. What that means is if they die in a common carrier, the policy triples. If they're applying for a $40,000 benefit, then it triples to $120,000. That's bus, plane, train, pretty much anything that you pay a fare for except for Uber and Lyft. Okay, that's that one. They also have Americo has a little bit different one as far as the smoker rate is concerned. This is only for their Eagle product. They're only for their whole life product. And so what that means is they get non-smoker rates for the first 3 years. Okay, all the other carriers, they do not have that. It's only Americo that has that. And so they're going to give them non-smoker rates for the first 3 years. They have to be a non-smoker for 1 year. So by the end of year 2, they got to quit smoking. Now, what Americo is going to do is send out a swab, like a Q-tip type thing, and they swab their cheek, they send it back. If they find out there's nicotine on there, they don't lose their policy. What happens is Americo gives them a choice. Do you want to lower the death benefit or do you want to raise the premium? They can choose either one. If there is no nicotine on there, the rates stay exactly the same. Okay. So that's the Americo benefit or the smoker's benefit. Okay. Prosperity, New Vista, they don't have a smoker benefit. If they're a smoker, rates go up. Okay. They have accidental, but you have to check a box if you want to add on accidental. Okay. And usually the way I position that with the client is I'll say, okay, it's going to be this price. And then I let them know, okay, they're asking me if you want to add on accidental. Now let's say, for instance, that price is $200 for $35,000 worth of coverage. Okay. Now they say, yeah, I can do $200. So then what I'm going to do is I'll say, okay, they're asking me if you want to add on accidental. And so I check the box, I give them a new price, and I explain to them what accidental is. You know, it's if you die in an accident, the policy doubles. Doesn't have to be a car accident. You know, I go into all of that, and then I'll say, actually, by adding this on, it only adds $11 to the price, or whatever that price may be. It only adds $22 to the price. Now, if it adds 22, then that final total is going to be 222, if you guys are following along here. Okay. But I'm not going to say it's going to be 222 now. Eventually I will, but what I'm going to do to add on that accidental is just say it's going to add on an extra $22. Not a bad deal for an extra 40 or extra $35,000 worth of coverage, huh? No. Okay, so now your total price for everything is 222. So that's kind of how I add that on there. That way you're adding a little bit of price for a big amount, right? So that's how you add on accidental. And you can do that with Mutual of Omaha as well. They have an accidental product, as you know. And so you can just say, okay, for this, and then it looks like you for the whole life coverage, it's going to be this, and then it looks like you qualify for accidental. And you can get up to 500,000 for this coverage, and it's only going to add blah, 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 and then put that number in there of what it's going to cost. Okay. So that's just a kind of side note there for the accidental portion of it. So moving on down the road, Mutual of Omaha is the same way. There's accidental. You just check a box and you add it on there. Now, AIG is a little bit different. Their guaranteed issue product does not have accidental built into it. Okay. They do have a 50% terminal rider. Okay. So if they become terminal after 2 years, it kicks in after 2 years, then they can withdraw 50% of the policy. They also have a 25% chronic illness rider. What that means is your 6 daily living activities. If they can't perform 2 of the 6 daily living activities, they can withdraw 25% of the policy while they're still living. Okay, so that's a nice benefit to have as well. Now, their AIG simplified issue whole life product is a little bit different. That one has 50% terminal. It also has a living benefit rider as well. I'm sorry, a living care benefit rider as well. So if they need a living care facility, they can withdraw a portion of that policy as well. And I believe, don't quote me on this, I'm not 100%, but I believe it's 25%. It could be 50. I'm not 100%. Okay. So that's AIG simplified issued whole life. Okay. Now their product, by the way, if you haven't written AIG simplified issued whole life, they have when you go into the application and you fill it out and you take, let's say they have COPD. Aetna will take COPD as well. And they do have an accidental rider as well. Aetna does. You have to check a box on that one. Other than that, it's 50% terminal. But AIG, sometimes if you think that it'll pass with simplified issued whole life, you can try it with COPD. If they don't take it, if it's mild COPD, sometimes it'll go through. But if they don't take it, then it'll bounce them to a graded plan. That graded plan is 30% for the first year, 70% for the second year, and then 100% for the third year. But it's cheaper than the AIG guaranteed issued whole life. Why is that? Well, they figure that they have a little bit of information about that client right now, so they're going to give them a graded benefit that's going to be cheaper than a guaranteed issued benefit. So, and it'll tell you right away once you fill out that application for the simplified whole life, if they've been approved, or if they're going to go to a graded benefit. Okay. If they could decline them, they could decline them no matter what. And then if they do, then you just go to a guaranteed issued product with them.
Right. Now, Sean, can I make a comment on that, please?
Sure. Go ahead.
I just recently had a client, and he had COPD, but he had not been taking the meds for like a year, albuterol, whatever, and Aetna just approved him as preferred.
Right. Aetna takes COPD. That's correct. Yep.
Okay.
Was that your comment?
Yeah.
Okay, cool. Yeah. Aetna is the one we go to if they have COPD. I'm just saying, if they do have a mild COPD, you can, and they get declined by Aetna, you can always try AIG simplified whole life as an example. Okay, so that's the whole life products. Does anybody have any?
Yeah. Okay. Nice.
Does anybody have any questions on that? I'm going to open it up for a few questions on the whole life products real quick. No? Okay. Moving on to term. And I think this is where everybody gets a little bit confused because they all have living benefits except for Ethos. Ethos does not have living benefits at all. They have term products, but it's just straight life insurance, meaning that if they die, it pays out. Anything happens while they're alive, does not pay out. Okay, so that's easy to remember, right? We're going to start with Americo. Americo, I write a lot of mortgage protection, and mortgage protection is, term benefit or term life with living benefits is built for mortgage protection. I always explain to my clients that, look, this is different than straight life insurance. Straight life insurance pays out if you die, but this pays out if you get hurt, sick, or injured. Okay, so you have 3 living benefits that come with term life products. Well, our term life products built for mortgage protection. One of them is chronic illness. And what that means is if you have a heart attack, stroke, kidney damage, liver damage, cancer, ALS, Huntington's disease, anything that's going to be life threatening for over a year. They don't have to wait for a year. They just need a doctor's note. But if they have ALS and they can't go to work, they qualify. That's one rider. The second rider is called critical illness. That's your 6 daily living activities. Okay, each and every one of us has to perform 6 daily living activities in order to stay alive. We have to be able to feed ourselves, feed ourselves, dress ourselves, medicate ourselves, bathe ourselves, toilet, and we have to be able to transfer, which is walking, moving, getting in and out of bed, moving about, right? If you can't perform 2 of the daily 6 living activities, you can literally withdraw a portion of the policy depending on the carrier. And we're going to go over what each carrier has for a living benefit here in a minute. The other living benefit is terminal illness. Okay, terminal illness is the same thing as it is with the whole life, If the doctor says you're going to die in 12 months or less, you can withdraw usually up to whatever carrier you're going with. It depends on what carrier you're going with, but you can withdraw up to 50%, 80%, 25, 100%, depending on the carrier. Okay. So those are the three living benefits that come with most all terminal riders for mortgage protection. Okay. Now we're going to start with Americo. Americo is the only one that I know of that has 100% living benefits. Okay. Chronic, critical, and terminal. If you die, if you're going to die in 12 months or less, or you get hurt, you get in a bad car accident and you don't die, you live, you're in the hospital, you're laid up, you can't perform two of the daily living activities, you can withdraw up to 100%. Okay. You have a heart attack, you have triple bypass surgery, you're going to be out for a while, you can withdraw up to 100% with Americo. Okay. Mutual of Omaha, critical and chronic, 80%. 80% for Mutual of Omaha. Terminal, 92% for Mutual of Omaha. Why 92? I have no idea. But that's the numbers they come up with. 92%. Okay. So, and that's for both of their term products, their IULE and their TLE, Term Life Express. Okay. Prosperity. Now, if we're comparing apples to apples here, if we're looking at term products, Prosperity is the cheapest product that we have. But the reason why it's the cheapest product is also because if you're comparing apples to apples, it doesn't have as good as living benefits. Okay. So critical and chronic, 25%. 25% for critical and chronic for Prosperity. Okay. Terminal illness, 95% for Prosperity. Family freedom term is what they call it. Now, one of the cool things about Prosperity is for critical and chronic, you can have one life event per year and then go back and request another benefit the next year. Here's an example. Let's say you get in a bad car accident, laid up in the hospital, can't perform two of the daily living activities, 2 of the 6. You can withdraw 25% of the policy. So on a $200,000 policy, that's 50 grand that they can withdraw. They heal up, they go back to work, everything's hunky-dory, and 3 years later, stroke of bad luck comes, they have a massive heart attack, back in the hospital, triple bypass surgery. They can withdraw 25% of the policy again from the benefit that's left in the policy. Okay, so that way, and you can keep doing that one event per year until the money is gone out of all the benefit. Okay, so Prosperity does that. They also can convert into a whole life policy of one of two things, whichever comes first, 10 years, within 10 years, or by age 75, whatever comes first. It'll convert into a whole life policy. If they want to convert it into a whole life policy, they base that new premium off of the age and not the health. So if they have a heart attack or they have cancer and they want to convert it into a whole life policy, they can still do it. The new price is going to be based off of the age. They don't care about the health. Okay. So that's Prosperity.
You said before 75, they can convert it into a whole?
Yes.
Okay, thank you.
Yep. Before 75 or within 10 years. So if they're 66 years old, chances are they're going to hit 75 first. Okay. But it also converts into whole life, but they lose all the living benefits too with that term life. Okay. American Amicable. American Amicable is great. They're usually a higher price. One cool thing about American Amicable that we love is if they do get declined at the end, they'll tell you the prescriptions that they declined them from. They also allow you to submit notes to them to let them know that, look, this client was on this medicine for this and not this, right? Because we all know that there's some people that get declined from a medicine and they're not even taking it for that purpose. They're taking it for the doctor prescribed it to them for another purpose that's not even valid. There's, medicines out there that do that. So you can actually write notes in and they actually do read those notes. I have had a client declined at one point in time, and then about a week later, they approved him. They took the payment out and he was approved. But I had gone to another carrier, got him coverage. Now he was approved by 2 carriers. So he got to choose which one he wanted. So American Amicable has 2 riders that come with their policy. Okay. With their term policy. They have chronic and they have terminal. They do have critical, but you have to check a box and you can choose 25%, 50%, 75%, or 100% term critical. The price goes up drastically by which one you choose.
Now, Sean, I got a question.
I figured you did.
So I was talking to someone who's like, oh, yeah, a few years ago I was diagnosed with COPD, but I'm not taking the medication. It was like, what did you take? Oh, albuterol. Are you taking it now? He said, no. I haven't taken that in over a year. And I put him through Americo and they approved him, which I was really surprised. Really surprised.
Okay. Sometimes clients think they have COPD. Sometimes doctors maybe say, you know what, you could have COPD. And sometimes that client takes it as I have COPD. But if they have gotten a prescription and then not gotten that prescription in over a year, a lot of times they'll get approved. So a lot of times you got to kind of ask them, did they say you have diabetes or did they say that they think you may have diabetes? And if they say, that they may get approved. So it's always good if you're not sure to run it through. I like to run it through everything through Americo first because they'll let you know right away anyways.
Right. All right.
Does that make sense?
Yep.
So,
Thank you.
Yep. Okay. So did we cover them all? We got Ethos, we got American Amicable, we got Moo, Prosperity, Americo. I think that's it. All the main carriers and all the writers. Do you guys have any questions on the term writers? Sam?
Yeah, real quick, Sean. I've kind of gotten just back to Ethos real quick. I've gotten like mixed stuff. I heard something from Marty. I've heard from the underwriters, and then also looking on their actual product guide. These Spectrum and Select don't offer any living benefits, but on their product guide, it does say that the Prime, so their top level one, comes with accelerated death benefit. So I'm trying, like, did you hear from Marty, or I'm trying to piece it together?
Some carriers don't call an accelerated death benefit a living benefit. So
Okay.
as I was talking about earlier, in California, there's no term writers. They do have an accelerated terminal illness rider. So some carriers don't call them, or some states don't call them a living benefit. I call them a living benefit because it's all, they're still living, right?
Right.
But I did hear from Marty that they are coming out with a product with living benefits. I'm not sure if that's coming out in the IUL that they're coming out with, or if it's coming out with another term product with living benefits. But they're going to have to, because we're writing policies with other carriers. So if they want to compete, they're going to have to change a little bit of their guidelines there for us.
Yeah. I guess I still just question. So if the Prime says that it comes with accelerated death benefit, then
if it
are we
says,
still
yeah, and tell them it.
okay?
If it says it right there on their guidelines.
Okay. I just wanted to like confer with you on that. Do you want me to drop that PDF into the chat?
Sure, you can. Sorry
Okay.
about that, guys. There's an Amber Alert in my area.
Mhm.
I just heard that alarm go off. It's probably going to go off again. So, okay, yeah, you're welcome to drop it in there if you like.
And
Appreciate that,
then
Sam.
other question that we talked
Okay.
about, I think, real quick, or maybe it was with Josh Lockhart. I can't remember. I had a guy that was not liking the disability stuff with Americo because it was only 2 years. But maybe it was Lockhart, but it was the two ADLs can basically be used as disability, essentially, right?
Yeah,
I mean,
pretty much.
that's essentially what that turns into, right?
Yeah, pretty much. I mean,
Okay.
if you can't perform, but really it's a little bit more lenient than actual disability. I mean, I
Right.
think of disability as I got my leg chopped off, right? But it could be technically the way they look at it, like with Americo, is you can't perform two of the daily living activities for 90 days or more.
Okay.
So, and literally you're not physically disabled at that point in time, right? I mean, you're just might be hobbling along. Maybe you like here's an example. We have some really good friends of ours that live on a lake out here in Omaha, and there was a 15-year-old kid driving the boat. They were tubing, and this lake has two parts. Well, you have to go under a bridge to go to the other part of the lake. And he was flying around that bridge to go underneath the bridge, and
Oh,
he
shit.
cut it too sharp, and all of a sudden the boat slammed into the wall, and the guy got hurt real bad. The girl that was on there got hurt real bad, and his spine detached from his hip, and so he's not necessarily disabled, but he's going to be out for a while. If he had an American policy or something like that, almost every one of those carriers we just spoke about, except for Ethos, would pay out that benefit. But eventually he's going to be able to get up and walk around again, right? So that's what those benefits are for. So I don't consider it fully disabled, but it does help out. Does that make
Yeah.
sense?
Okay. Yeah. So then that's a good selling point because I lost that sale on the spot because I didn't think of that. And
Okay.
I'm trying to play catch up with him. So I guess that's a good point to everybody. So
Yeah.
appreciate the clarification, Sean.
Sure. Absolutely. Absolutely. Any other questions from anybody?
Good question. So the 80% that pays out for Mutual of Omaha, so does the 20% still stay as a death benefit, or do they just wipe that out as just a cash out of the whole policy?
No, everything. So if it's a $200,000 benefit, 80% is 160,000, right? And so they're going to pay out up to 160,000. And the
Okay,
rest
so
of it just stays as a death benefit. And
okay.
here's the reason why. This is just Seanism, but I think this is the reason why, right? If you're a carrier, if I pay out 100%, are you going to keep paying on it? No, it's
No.
one and done, right? But if I only pay out 80%, are you going to keep paying on it?
Yep.
Chances are, right? So yeah. So that's my theory on it. Does that answer your question, Dan?
Yes, sir. Yes, sir. Thank
All
you.
right. Any other questions?
Yes, I do. What is the best way to present an IUL? I've got some clients that are asking, well, their whole life, 50,000, IUL 50,000.
Yeah. So let's kind of keep it on topic here, Kelly. I'm going to have
Okay.
you refer that question to Josh Lockhart. He's really, really good at IULs, and he would
Okay.
probably be able to answer that question more than I do.
Okay.
I'm not against IULs, but I think there's better products out there for term insurance. Okay. So yeah, ask Josh that. All right.
Okay. Now you say term insurance, these are kind of like halfway older, they're late 50s, early 60s. And so I could do term, but
Yeah.
you know,
So here's the thing. Let me explain something. That's a
Okay.
good point that you bring up. You guys are calling final expense leads. You don't always have to write a final expense policy.
No,
So what I did was, one time I had a lady, she was, how old was she? I got to stop and think. Hold on a second. I'm getting old here. 62. And she wanted $50,000 worth of coverage. Okay. And she already had a policy in place. No, she wanted 30,000. This was last year. She wanted $30,000 worth of coverage, and she was paying, I think it was like $55 a month. She was low income, living with her daughter. She just wanted to make sure her daughter was covered. Okay. So rather than putting her into a whole life coverage policy at 30,000, what I did was I went to Prosperity and I wrote her a term policy for 50,000, and it only cost her about $8 more a month. Now, why did I do that? Well, the Family Freedom term, as you remember, comes with living benefits, 25% for critical, 25% for chronic, 95% for terminal, while she's still living. Okay. That covers her for it. It was a 15-year term. But here's the most important part. It's also convertible to a whole life coverage. So she's 62 years old. By the time she's 72, she has the opportunity to change that into a whole life coverage and keep the payment the same and have a $50,000. Well, it may not keep the payment the same. I shouldn't say that. It's all based off of age at the time that you take it out there, but not your health, right? But she could change that into a whole life coverage. So she took that because she got more of a benefit. She got living benefits at the time, and it's able to convert it into a whole life coverage. Okay. Now American Amicable does the same thing too. They'll convert it into a whole life coverage as well. Okay. So you can always, and you got to talk to your clients a little bit too. I mean, let's say that they come in as a final expense lead and they're 43 years old, right? But they're single, but they just bought a house, or maybe they bought a house 10 years ago and they still have 15 years left on their mortgage. They got a 25-year loan and they got 15 years left on their mortgage, and they owe 100,000 on their house. For that type of a product, or that type of a client, I'm going to go with a term policy, because now it's going to help them protect their mortgage. And if they die, it's going to pay out. If they live, get hurt, sick, or injured, it's going to pay out as well. So it's always good to talk to your clients, find out what they have. On the financial inventories, where's my financial inventory here? That's what that section is right up at the top there, right here. That's what we write in there. You know, are you renting or do you own your own home? Well, I own my own home.
Yeah,
perfect.
that's where I've been missing. I have not been asking people for the financial inventory.
Yeah,
I
that's
just
what it's
kind of,
there for.
okay.
Yeah.
Got it.
So,
Oh, that's a
uh,
question.
yeah, who said that?
That's Tanya.
Tanya, there you are. Sure, go ahead.
So I have an upcoming appointment with a married couple because they're newlyweds. The wife is like 8-9 months pregnant. They don't smoke. Just in general with younger families, maybe they're like around 27-ish, somewhere around there. I was thinking either obviously either whole life or IUL in advance. I don't know much more about them yet. I still have to go through everything.
Uh-huh.
But I was wondering, like, how do you typically handle, younger, new families, I guess?
Well,
Like what?
remember that financial inventory is there to find out the need of what they have. And
Right.
sometimes clients, they don't know what they need, right? If
Yeah.
you ask a client, here's the reality. If you ask a client, do you know the difference between term and whole life? Most of them
Mhm.
will say no. If they say yes, and you ask them to explain it to you, most of them will give you the base knowledge of what term and whole life is, and some of them even get it wrong. So that tells you that most people don't even know what they need. right?
Mhm.
So that's the important part of going through that financial inventory, finding out, do they own their own home? Do they rent? What's the purpose of insurance? Because you got to remember, life insurance has different purposes, right? Whole life can cover a burial. It can also cover a cremation. If somebody's VA, they already got the burial covered. What about final expenses? What about some minimal payments for a mortgage, 6 months to get their loved one goodbye, or get their loved one by for the next 6 months so that they don't lose their house to the mortgage company because their loved one now has to make 2 mortgage payments, the one they live in and mom's because mom passed away, right? So all we're doing is solving problems. We're finding solutions to the problem, right? And so I would talk to them and find out, do you own your own home? Are you planning on buying a home? If they don't own a home right now, you can still sell them a mortgage protection term life policy. Because what if they're planning on getting married next year, and then in a year after that, they're going to buy a house? And let's say that they don't know how much the house is going to cost, but let's say that you apply for coverage now since they're pretty young, and you put them in a policy that covers 200,000, and it's got full living benefits. Now, if they do go buy a house, and let's say they buy a house for 400,000, half the mortgage, or half the term that, or I'm sorry, the mortgage is double the term that you applied for. Well, still, if something happens to them, if they're hurt, sick, or injured, that person can get up to 200,000 if they go with an American policy. For Moo, 80%. That's 160,000, which is a huge benefit to protect them if they have a mortgage, right? And so there's all you're doing is kind of playing a game. It's a puzzle game, right? You're trying to figure out, what do they need? How can I protect them, right? And if they're young, if they're in their 20s, I'm writing a term policy all day long, even if they applied for or wanted a final expense policy. Because for one, it's so cheap. It's really cheap for 20-year-olds. And so I would write a CBO America 100. I would try to apply for that. I give them some options, by the way. I would give them an option of a continuation 25, and then maybe a CBO 100 where they get their money back. And then I give them a third option of maybe a term 125 to where that's the cheapest, but they don't get their money back. But really the price difference at their age isn't going to be too much.
So I guess with the term, I'm actually glad you brought that up. Because I thought that since the term can only go up to 30 years, I mean, you could die anytime, essentially, but like, how can you extend? I mean, like, can you extend it or get another one
Why would you want to extend it?
when it expires? I'm just when it expires. Since it's a short, if you get it at 27, say for 30 years, then by the time you hit 57, it expires. So then could you
Yeah.
just apply for more coverage?
Yeah,
That's a
exactly.
good point.
And that's what it's built for. That's a good point you bring up, because that's what they're built for, right? When you buy a house, you only have a 30-year term.
So what are your thoughts on some people saying that it might not be worth it for younger people to get term and just wait till like you're 45
Well,
and then get
that's
the
just
term and get the
uneducated
whole
people
life
saying that
before?
it's not worth it. That's just
Hmm.
uneducated people, because everybody needs some type of insurance. I mean, you insure your house for homeowners insurance. So if you have a fire, then you want to protect your home, right? You insure your car and hoping that nothing ever happens to your car, but you still pay the insurance. I've been driving since I'm 16. I've been paying it for 30 years, right? And I always hope that I never get in a car wreck, right? I insure my phone, my cell phone, $1,000 item. I insure it, right? But I don't want to drop it. I don't want to ever anything ever to go wrong with it, because then I got to deal with the insurance. But I keep paying on it because in case something does happen, it's insured, right? Why not insure our lives, right? If you think about it, a 30-year-old male has 35 years left of their life before they retire. So if they're 30 years old, they're going to retire at 65. That's 35 years of their life. Let's say they make 20 bucks an hour and they make that until they're 65 years old. 20 bucks an hour times 40 bucks a week. That's $800 a week. If you multiply that times 52 weeks in a year, that's $41,600 a year. Now here's the key. $41,600 a year. You multiply that times 35 years, that's $1,456,000, $1.5 million. They're a millionaire over their lifetime, just making 20 bucks an hour. Why would their life not be worth insuring just because it's a term policy? Right? Term policy. A term policy pays higher benefits than a whole life policy. You can get higher coverage. A whole life policy, you can get up to $50,000, okay, in a whole life coverage. In term policies, we have America, you can get up to $450,000. And if you go with Term Life Answers with Mutual of Omaha, you can get up to 65 million. But that's a fully underwritten plan. You have to get a blood draw, a medical exam, everything. But my point is there's a purpose for all types of insurance. Okay. Does that answer your question?
Yeah, it does. So if you, okay, that's certainly when they're younger, it's less expensive. So then if they wanted to, well, I know like with some of the companies I contacted, they said you can convert it to other policy types, like a whole life. But if they wanted to get another term, the premiums would be astronomically high. So I was just wondering.
That's irrelevant. That's irrelevant. Yeah. One guy thinks that $400 is expensive, but another guy thinks that $1,600 a month is cheap.
Right.
It's their perspective, not yours. You can't put your own brain in their head, right? If you think it's expensive, they're going to think it's expensive, right? You're there to do a job and present options to them, not tell them what they should do or shouldn't do. You recommend options to them, right? But the reality of it is, if they don't have any coverage, they're liable. How many people do you know that have had a heart attack and died, or got hit by a car and passed away? I don't know about you. I'm 47 years old. Everybody I know over the age of 20 has been in some type of a car accident. Some of them have died. Some of my friends have died in a car accident. Some of them have only been in a fender bender, but they've still been in a car accident. I've been in 7 car accidents in my life. I've been in cars that have flipped over, right? So why not insure your life? Do you believe in life insurance? I do. If you believe it, you should help them understand why it's important. For sure.
Gotcha.
Can I comment on that?
Sure.
Okay. So this is something that I learned from Sean, and Sean was right about it. My first one that I wrote, I was looking into what would fit in their budget based on their income and their expenses. So I had this one client that his income was $1,200 and all his expenses was $1,200. So to me, he can't afford anything, right? So I went along with him and I presented for what he was asking, which he was asking for a $20,000 policy. I presented the $20,000 policy and it was $116. But if I look at his income and his expenses, he can't afford it. So obviously there's something that he's not telling me. So I presented 2 different options. One was like 140 and one was 116. I'm like, he's not going to go with any of them because, you know, he's not going to afford it. And sure enough, he picked the 116 and I wrote him up and it went into effect. So from there, I learned from Sean not to pick for the client and go based on their income and expenses, because there is other things that they're not telling you, and let them choose because it's their policy. Don't choose for them just agree with them for what they choose. Does that make sense?
So what he's talking about is, of the things that they're not telling you, is that there may be things that they value that they will give up. Like, let's say they're a smoker. What if they're willing to give up smoking? What if they're willing to not drive to work because they work 2 blocks away? They're just going to ride their bike so they can save gas. So maybe they value the insurance to protect their family over the small income that it has, right? But that's not for us to decide. The other alternative is maybe Hytham could have said, you know what? I don't think you can afford this. Have a nice day. 2 days later, he passes away. Now there's a financial catastrophe in the family because the daughter doesn't know how she's going to bury her dad because she doesn't have the money to do it. Right. So it's always important to let the client decide. You just present the benefits. The purpose of the financial inventory is to help them understand, you know, where they're at financially and put them in the best product available to them. Obviously, you're not going to go for 450,000 in a term policy if they only have $100 extra per month, right? So you want to make it affordable for them as much as possible, but ultimately it's their choice. They filled out the form. They want coverage, right?
Right.
So, okay.
Is
We-
the VA, sorry.
No, go ahead. Did you have another question?
Veterans, I got a veteran who said to me that he was already covered by the U.S. government. I didn't really know what to say to that one because I'm like, well, if he's covered, like, I don't know. I'm not sure how much coverage he got, but he kind of hung up on me anyway. So that was gonna be my next question. But how do you handle that when they tell you, I'm covered by the U.S. government? You know, I'm a veteran.
Okay, well, they filled out the form for a reason, right? And so I let them know that there's all different types of purposes for insurance. I had a lady last night that she bought a $30,000 final expense policy for mortgage protection, but she also already has $50,000 of a whole life policy. So now she has 2 policies. But what's the purpose of the policies, right? If you can't think of like whole life as, okay, this is only going to protect the burial and the final expenses. There's other things that it can protect. It can protect final expenses, living care benefits. It can protect nursing home benefits. It can leave some money behind to loved ones. It can protect mortgage payments. And that's why she bought the $30,000 policy, because she wanted to make sure her cremate or her burial, everything's all taken care of. Okay. The money left behind to the kids is all taken care of. But she didn't want any of that money coming out of there to pay for the payments of the house to her husband. So she took out another policy to give him a year's worth of payments for the house, so that when she passes on, he doesn't have to come out of pocket to pay that mortgage for a year. It gives him time to think about, okay, do I want to fix up the house? Do I want to sell the house? Do I want to keep the house? Do I want to give it to the kids? What do I want to do? Rather as day one, boom, dead, she's gone. I got to sell the house right now. Otherwise the bank's going to come take the house. Right. So you got to think there's more options than for life insurance. There's people can have 3, 4, 5, 6 policies for different reasons, right? They've bought in policies for this kid, another one's bought in a policy for this kid, another one's bought in a policy for this kid. Maybe they have a $75,000 mortgage they need to cover, and they can only qualify for whole life. Well, you can stack 2 carriers on top of them to get $75,000 worth of coverage, right? You can always do it that way. So there's all kinds of different purposes for it. Does that answer your question?
Yes. Thank you, Sean.
Sure. Absolutely. Vadim, you got a question? I can't hear you.
His question was in the chat.
It's not, well, I
Oh.
believe, so Sean, I believe with the VA, you have to be active duty to get the burial. Otherwise they give you $300. That's my understanding.
That could be. I have no idea. I have no idea. And I'll just let them know that, that's cherry on top. And thanks for letting me know that, because I don't know if that's true or what, but
I'll
if
send
that
you a
is
link.
true,
I'll send you a link.
that's great. Okay, so if they're active duty, then they get the full burial. If not, they just
I
get
think
three
it's
hundred bucks.
like $2,000 or full burial, but if they're not active, it's like $300. It's really insignificant.
Okay,
Oh,
My
somebody,
Tanya just posted it.
yeah.
No, it's really insignificant. I had a buddy that passed, and he was T-bone. We went through a lot of stuff, and he was a military vet. They only paid $300 to the.
right.
Yeah, it was sad.
Yeah. Okay. Cool. Well, that answers that. So we are at 8:52. We have gone way over. So I want to get some role play in here, because the whole purpose of this is to also get people on board doing role play, getting better, and then that way we can help kind of tweak it a little bit as well. So we got time for probably one. Well, we'll do two. One does the client, one does the agent, and then we'll flip.
What kind of role play do you want to do?
Let's just set the appointment. The biggest thing is setting the appointment, and I feel like that's the most important part, right? Because if you don't have any appointments, you can't do any presentations, right? One call closes are really good, but about 50% of them end up in an appointment. Maybe even more than that. I don't even know the statistic, but maybe even more than that end up in an appointment. So let's practice setting the appointment, nailing them down, and then we'll just call it a night. How's that sound?
Sounds
All right.
good.
Dan the man, you want to get on deck?
Man, I'll probably be a spectator today.
Be a spectator? Okay.
Yeah.
All right. Who wants to go first?
I mean, I'll go if somebody want to go, but I was just leaving a chance for somebody else.
Kelly's always here.
Okay. So if nobody's going to raise their hand, Sam
Sam
and
is
Kelly.
a vet.
Always.
Sam
All
is a veteran.
All right. Okay, cool. Let's go.
Who and who?
I'll go ahead and be client.
Okay,
All right.
Kelly, you'll be the agent.
Cool beans. Hey, Sam.
Yep.
Hey, this is Kelly. I just want to let you know I'm not a telemarketer, but it's kind of weird, but your case has been assigned to me, and I need to figure out something. So I need to verify your birth date as January 20th, 1964. Is that correct?
Oh, what are you trying to verify? I don't. What are you calling for?
Okay. Well, a few months back, you had apparently filled out a form for final expense burial coverage. Who was it you're trying to protect? It looks like you had your beneficiary as Janet. Is that correct?
I don't recall filling that out. Janet might have done something like that, but I thought I already had something like this in place.
I most definitely understand. Yeah, I get it. So if Janet filled something out like that, now let me ask you this. Have you already have something in place as far as your final expense and burial coverage?
Oh yeah, like I said, I kind of thought I already had something in place, but hey, I'm actually on my way into work. I'm just coming off of lunch, so I gotta go.
Okay. Now, Sam, this is very important. I am a regional manager. So what we need to do is set up a time that you and I can get together so that I can make sure you have the right things in place, that we had the right people, that took care of you. Does that make sense?
Yeah, but again, I gotta go. So I mean, can we talk later? Or I can give you a call once I'm done at work.
Yeah, well, you can't really give me a call because I'm busy all day long. Let's do this. What does your day look like tomorrow?
I'm gonna be getting off work at about 8 p.m.
About 8?
Yep, I work 8 to 8.
And that's Central Time. Okay. Well, I'm going to be working until about 9 my time. It's going to be tough. So it's going to be very short. But let's do this. I know you're driving, you're going to work. That's cool. Do you have a pen or anything that you can write something down on?
No, just text me. But I really got to get going.
Okay. What I'm going to do is I'm going to text you for a time at about 9:30 tomorrow night. Does that work for you?
Sure, that'll work.
Okay. Now, my text is going to be coming from a different number than this one, but I will be calling you from this number. Okay.
Okay.
And what we're going to be talking about is just going to be taking about 15 minutes. Is that okay?
Yep, that'll be fine.
All right. Thank you, sir.
Hey, I really like that you didn't let me rush you. That was good.
Yeah, I think I'm gonna be straight up with you, Kelly. Is that okay?
Yeah.
I think that you sound like a scam. And I'm gonna just tell you like it is.
Why?
Because at the very beginning you were like, this may sound kind of weird, but I'm not a telemarketer. And then I need to verify some information, right? And if somebody is saying that to me, I'm gonna just hang up. It's kind of a waste of time, right? So we want to be kind of serious. We want to be very professional, very direct, right? Keep a level playing field, right? Emotions don't go up, tone of voice doesn't go up, right? The whole point is keep them on the phone for 30 seconds. You get to 30 seconds, you pretty much got 5 minutes. You got 5 minutes, and then pretty much you got the whole call, right? So, hey, Kelly, this is Sean, just giving you a call back regarding that burial and final expense form that you had filled out. This is in regards to the state programs that are going on statewide right now. Yeah, they just want us to verify real quick. I got your address as 123 Main Street. Your date of birth is 9/16/27, and then move on to it. Just boring and slow, right? And then you get into finding the need if you need to, if you're going to do a one call close. Otherwise, you're just going to set the appointment. And a lot of times I just tell them, I can't do it right now. Because if you tell them I can't do it right now, they're going to think, okay, great. And that lets down their guard. And now they're going to listen to you, right? Hey, Kelly, this is Sean, just giving you a call back regarding that form that was filled out. This is in regards to the final expense of burial programs that are going on statewide right now. I got your date of birth is 12/12/62. Is that correct? Yep. Are you a smoker, non-smoker? No, I don't smoke. Perfect. They just want me to go over the options with you. I can't do it right now. I'm just calling to find a time to do that. What time do you usually get back in the door from work? Are you working? Retired? Disabled? No, I'm retired. Okay, perfect. Tomorrow, it looks like I can squeeze you in at 10:30, or I got a 1:45. Which one of those best fits you? 1:45. Remember, multiple choice. All we're going is right for the appointment, right? We're not trying to sell them. You don't even, if you know you're going to set the appointment, you don't need to find the need. You don't need to do anything, but just call and set the appointment.
Correct.
Right?
Correct.
I remember Sean Mike talking about a story how he had one agent that was like, man, they did this and they said that, and I can't get them to set an appointment. And he's like, what? How hard is it to set an appointment? Just tell them you're coming over. So he picks up the phone, calls the person back, and is like, hey, Joe, yeah, I'm the manager for Andrew. He's coming over at 6 o'clock tonight or tomorrow night. He's going to be in the area. There's no reason why you wouldn't be there, right? And he's like, no, I'll be here. Okay. He's just going to go over the options with you. He'll be there at 6. Okay. All right. Have a good night. And he sets the appointment just like that, right? It doesn't really matter. Obviously you want to nail down the appointment, but we got to get to the appointment quick, right? And a lot of times when you tell them, I can't do it right now, that's going to lower down their guard. Make sense?
Yeah, absolutely. I do believe that there's been times where, I try to go for the one call close and they're just not ready.
Right. So then you set the appointment.
Let me ask you this real quick, Kelly. Are you kind of basing some of your script off of NEPQ?
I wouldn't say that. It's more off my head.
Okay. I just wanted to ask that because of some things you're doing, but okay.
So here's the thing. Before you come out and think about it on your own, you got to memorize your script. You have to memorize. Say it word for word. Say it 100 times. And that way you have the concepts down. When you say it 100 times, now you can tweak it a little bit, right? That's the most important part. Because if you do something over and over and over again, now you become a master at it. And you have to do it at least 10,000 times before you become a master at it.
Okay.
And if you can master your script, you're definitely going to be able to set a lot more appointments. And if you set a lot more appointments, you're going to get a lot more presentations.
Okay.
Okay.
So, hello, Sean.
Yeah.
Hey, Sean. This is Kelly George here, and I'm just getting back to you because apparently you had filled out this form, and it's my job to get back to you on it. And I see your birth date is January 20th, 1964. Is that still correct?
Yeah, that's correct. Who is this?
My name's Kelly Gerards. I'm a licensed underwriter for the state of Colorado. And it's my job to get back to you to make sure you got all the information that you needed in regards to, I mean, most people fill out these forms,
Yes, sir. You just told me that. What's the call about?
Most people fill out these forms, Mr. Sean, for, final expense, burial coverage, and so on and so forth. It's just my job to make sure I get this information back to you. Is today a good time? Do you have a pen and paper handy?
Actually, no, I don't.
Okay, well, let's do this. Can you grab a pen and paper? Is it possible?
Absolutely not. I'm running to the bathroom right now. I got to get going.
Okay. Can I call you back in about 10 minutes?
No. I'll still be in the bathroom.
Okay. When's a better time? Can I call you back in 15 minutes?
Actually, I'm not interested, sir.
Well, it's my job to get back to you as far as the information that you requested. And I understand that we got to go do what we got to go do, but it's my
Sir,
job.
I got to go. I got to run to the bathroom.
Okay.
Try me back next week.
No, I'm going to call you back in about 20 minutes. Is that okay?
You do that. You have a nice day.
Okay. Good
All
enough.
right. But okay.
If you answer the phone on the way to the bathroom, you have time.
I was just waiting for him to set an appointment. He didn't want to set an appointment.
Okay.
So, okay, Sam, you go and set an appointment. Can you
Give me
be
just
the client?
a half second. My dog is like freaking out on me. Yeah.
Okay, sure. And then we'll end the call here.
So, Sean,
Sorry.
any input at all, please?
Yeah, you got to set the appointment, man.
All right.
I think, Kelly, I think it'll be best that you stick to the script for now until, like Sean said, you have it memorized so you can flow with it and sound more real than nervous. Like, to me, you sound like you're nervous. You don't know which way you want to go. And that's how it sounds to me. And I'm not, trying to bash you or anything, but I'm just here to try to help you with my input if you care to hear it. You sound like you're nervous. Like you don't know what you want to say next. Okay, sound like you're scrambling, and I really think that you should try to memorize it more so you can sound more natural. That's just my input.
Kelly, give me a call after the call, and then we'll chat. Okay.
All right.
All right.
You want me to run mine?
Sure. Go ahead, Kelly. I mean, Sam.
Who am I calling?
You calling me?
Hi, them.
And I'm hanging up on you.
All right. Let's do this, buddy. Ring, ring.
Hello.
Hi,
Yes.
Hey, this is Sam. Real quick, just getting back with you about a request. Like I said, I'm into my office a couple months ago, and I have a quick concern I was hoping you could help me out with. it looks like you sent in a request looking for some information on some final expense quotes, and it's showing unresolved in my system. And I'm assuming my guys got lost in a sea of spam calls. Does that sound right? Did any of my guys get back to you?
No, I don't remember filling anything out like that.
Yeah, that's fine. Like I said, this was a couple months ago, so this was probably a quick request. But again, my point is just that none of my guys got a hold of you. You probably got a bunch of spam calls. And I don't have a whole lot of time at the moment. I was getting a hold of you between appointments. So I just need to set a time to double check that this stuff is right. I have a date of birth of 8/8, 1990. Is that correct?
That's correct.
Okay. So yeah, like I said, just gotta make sure that what I have here gets to you. I don't have time at the moment, but I've got time tomorrow in the morning or the following day in the evening. Are you more of a morning or an evening person?
I work in the morning. I usually get off at 5 o'clock in the evening.
5 o'clock. Okay, I don't have a 5, but I do have a 5:40 that I can squeeze you in at. Is that gonna be good for you? Do you have a spouse that'll be available at that time as well?
That would work. My spouse will be at work though. She works midnight.
She works midnights. Okay. Is there a day that you both have off then?
On Saturday.
Saturday? All right. My Saturday is a pretty short window. I have a 10:20 or an 11:15 available. Which one you want?
I like to sleep in on Saturday, so maybe let's go with the 11:15. That would work.
All right, 11:15. I'm going to shoot you a text real quick as once we get off the phone. It's going to have a link to my site so you can see who I am and I'm not some random person. And it's going to have a link to the Department of Insurance and Financial Services so you can verify my license info. It will have our appointment time in there. And we will talk on Saturday at 11:15 in the morning. And I will talk to you then. Have a good one, Hytham.
All right, you too.
Bye-bye.
Okay. Not bad, Sam. Not bad.
I stumbled
think-
hard in that beginning.
Yeah, that's okay. That's okay. Here's the deal. If you got somebody on the phone that's willing to sit there and talk and they're not in a hurry, anything like that, nail down the appointment, right? I send out text messages too, but here's what I like to do. I like to, one, get them say, yes, call me at the very last part of the appointment, and then I get them to write it down. Remember, there's a power, a huge power in these pens, right? Because when you write down something, your brain remembers it, right? So you can just tell them, hey, pardon me, but can you grab a pen? By state law, I need you to write down my state license number. Now, you tell them that they have to do something by state law, they're going to be like, okay, I'll get up out of my chair, go grab a pen. And then they're going to grab it and they'll say, oh, then you can say, okay, my name is Sam Kelly. My state license is 123456789. By the way, since you have your pen and paper there, write down the appointment time. Saturday at 11. I think that's what you said. I don't remember. Saturday at 11. What's that?
11:15. But
okay. Saturday at 11:15. And then right next to it, write down in big letters, important, important. I'm telling you, when you do that, they're going to show up almost every single time. Because now you just got them to write it down. Now you got them to write down important in big letters, right? And now they hear me say important. So not only are they visualizing it, they're also hearing it because I'm saying it. Okay. If you read a book, if you're reading a book and you listen to Audible at the same time, the information that your brain sticks in your head is about 70 to 80% more than if you just read a book or if you just listen to the book, right? It's the same way. If you're having them write it down, they're going to be at that appointment. Then check this out. I'm going to give you permission to be late, right? So now I need to ask you a favor, Joe. I have literally 8-9 appointments ahead of you. So if you could give me like a 15 to 30 minute window on both sides of that appointment, I would be very grateful. I may be running a little bit late, but if I do get done a little bit early, I may call you just a tad bit early. Is that okay? Yes, you can call me. Yes. They just said yes. Great. You have a wonderful evening. we'll chat tomorrow at 11:15. Right? Now I nailed down the appointment. They wrote it down. They heard me say it. They wrote it down. They visualized it because they see what they're writing. Right? And now they gave me permission to be late, which is awesome because if you got appointments stacked all day long, then if you're late to one, no problem. They already know. And you wouldn't believe how many times I've called an appointment a half hour, 45 minutes late, and they're there. And I apologize. And I say, I'm so sorry. Even if I'm 5 minutes late, I'm so sorry. I've been late all day. My voice is all raspy. I apologize. Oh, no problem, sir. You already told me you were going to be late. And sometimes when I'm right on time, they're like, I was expecting you in another 10 minutes. You said you were going to be late. So ask them or tell them to give you a 15 to 30 minute window. And then also make them write down your information, write down the appointment. And I promise you, you're going to get a lot more shows by doing that.
That's what I've been missing. I did that in the beginning when I was running in homes, and I switched to so many one call closes that when I started switching to stuff that requires appointments, I've had such a low show rate. And it's because I'm not doing that.
Yeah.
So
locking down the appointments. Right. And it's hard to do if you got to stuff the appointment in there, but you do the best you can. Right. You always do the best you can. But, and that's the best appointment you can possibly have is by getting them to write it down and then telling them you may be a little bit late. Right. But we all know this isn't a perfect world. So, I mean, if you can do that every single time, do that. But if you can't, then at least tell them you're going to be a little bit late and get them to say yes at the end by saying, if I call you a little bit early, is that okay? Yes. Now they at least told me yes. But if I can get them to write it down, I'm going to get them to write it down every single time.